get into the room, and then we'll go ahead and get started. But welcome and thank you for joining us today.
I just want to say, since we're not going to talk about it, I think Run the World is a very cool platform. And I've never been in here, but this is very cool. So congrats to whoever invested in them. I think A16Z, but this is a lot cooler than Zoom.
So much cooler than Zoom. I agree.
I like it. It's 1:03. All right. So we're going to go ahead and get started. I want to second what Brian said. I'm really enjoying the Run the World platform. And I want to welcome you all to this session today of the 500 Startups Unity and Inclusion Summit. This panel is building a better Black investor pipeline. And so we have some amazing speakers here joining us today. And so I'm going to start by letting them introduce themselves. And I will start by, on my screen is first Chelsea. You want to go ahead and introduce yourself?
Yeah, I'm Chelsea Roberts. I'm the COO of HBCUvc. Really, our work is centered around racial equity and more inclusive economies. We're grounded on and around HBCU campuses in the southeastern region of the United States and have been expanding and growing our programs to a few other geographies. We're really hoping to build out the innovation ecosystems there, most notably in Black and Brown communities, secondary markets. I have a background in healthcare. I worked in healthcare consulting and health tech for a little bit, and I'm a graduate of Spelman College and a current MPA student at NYU Wagner.
Excellent, thank you. Next, we have Brian.
Sure. Hi, everyone. My name is Brian Hollins. I'm founder and CEO of the Takeoff Institute, designed to help Black undergraduate students get equipped for their young professional careers. I'm also a founding board member of BLCK VC, Black investor ecosystem, focused on getting people not only into the venture ecosystem, but up the ladder into check writing capacities. I started my career at Goldman Sachs. I spent 6 years at the firm, 2 in the investment management division, and then 2 building the Emerging Entrepreneurs Coverage Group, which was a group focused on identifying resources for early stage entrepreneurs and helping them get introduced to the firm. And then 2 years in the merchant banking division doing enterprise software investing out of the growth equity arm. Super excited to be here and to talk about the pipeline.
Excellent. And last but definitely not least, we have Bahiyah.
Thanks, everyone. So great to see you. Great new faces, old faces. I'm Bahiyah Yasmin Robinson. I launched VC. I'm an impact investor, actually, the last 12 years or so. Started investing in the first generation of entrepreneurs in Africa and building a lot of the ecosystem and groundwork to create a enabling environment for follow-on investments. And then in 2018, kind of skipping through several iterations of supporting underrepresented founders and raising capital for some of the first 30 or so Black women to raise over $1 million, I started focusing on the asset manager level, or the VC or emerging fund manager pipeline, because I see a platform that was really sourcing and aggregating best-in-class Black, Latinx, and other underrepresented managers, and particularly women. As a Black woman, the gender piece is really important to me. And so launched in 2018, worked with 50 plus funds. We have a pipeline of several hundred funds, launched most recently the VCI Fellowship for BIPOC first-time fund managers, which has 15 funds in it. We're about to launch a climate fund program, so focused on sustainability and climate. I mean, I'm in the intersection of investment inclusion and innovation, but really making sure that ESG and impact is embedded in the next generation of leaders and investors, and that we're doing well and doing good with our investments as a community.
Excellent. So thank you guys for joining us. For all who don't know, I'm the moderator today. My name is Monica Wheat. I am the founder and executive director of Venture Catalysts. So we're a large-scale ecosystem development group. We're based in Detroit, but we work throughout the United States, helping ecosystems develop, venture ecosystems in particular. And that's why I was really excited to get a chance to be the moderator for this panel today, because when I started investing, way back when, we won't mention, when I started investing, there weren't groups like this. Groups like this did not exist. And there weren't routes to access like this. So I'm hoping we'll have a really great discussion today. And we're going to start off a little bit by looking at the first question. The first thing you hear when you talk about venture capital is pipeline, pipeline, pipeline. Everyone's always talking about there's just not a pipeline of potential investors, and that's why there aren't that many. One of my very exciting partnerships and roles has been with Backstage Capital, running their global accelerator, and we face the same issue. So I want to start with Chelsea, and I really want to dig into this pipeline question. Can you talk to me about what do you think are some of the common misconceptions about what the issue is with access of having Black investors into the pipeline for investment?
Yeah, so our when we were founded 4 years ago, our HBCUvc was founded because our CEO, Hadiya Mujahid, realized that there was this gap in access to capital for founders. And so her solution was to train more, if there is this gap, if there are not enough Black investors to, then invest with an equitable or framework or mindset, then how can we train more Black investors at the earliest stages of the pipeline? So we work with our flagship program at HBCUs with students, undergrads and graduate students, and this year we've actually welcomed alum into our program. But the solution was if we train more people, Black and brown people at the earliest stages of the pipeline, they will then invest in their networks, in their communities, in their friends, people they went to school with, right? She was seeing these university networks in Silicon Valley. Everyone, there was an X percent of people went to Stanford and Harvard. They were invested, X percent of founders who had raised X dollars also went to Stanford and Harvard. So really leveraging your university network, your community, HBCUs are really grounded, and the culture is very much so rooted in network. And that's kind of one of the biggest strengths of HBCU. So she figured, there's this makeup happening. Let's take this to the southeastern region of the United States, secondary markets, right? Like 5 years ago, I don't know if Atlanta was as popular as it is today for innovation and venture investing, but right, like the culture has shifted, I think, because of some of these pipeline programs, and people are realizing that there's certainly talent out there. A lot of our work centers around exposure. Each class, each cohort of ours is a little bit more sophisticated in their knowledge of venture capital, because each as time goes on, each year, I think the knowledge is democratized. So really, it's not like a pipeline issue. It's the like exposure and access issue, which is what we're hoping to solve through our programming and our work.
Good stuff. And I think that's definitely true. That access piece, we talk a lot about the fact that most of the opportunities are people just not knowing how to start the conversations, whether it be in an unofficial roles, or in official roles, or job interviews and things like that. If we can move a little bit, if we wanted to shift, if you talk about pipeline, they say there's, they think that there's just a gap. The next piece is then they talk about there's this pattern. There's this pattern of where folks think the best investors are going to come from. Where that's on the founder side and the investor side, actually. But where do folks think these venture capitalists are going to come from? If we can shift to Brian for a minute, I wanted to talk a little bit about where you see the pattern shifting, and then where do you see are some of the best networks, as Chelsea was talking about, some of the best networks where folks can prove themselves as being a part of the pattern of those who are going to be successful investors.
Sure. I think what's incredible today, and Bahiyah, example, in VC Include, VC Include did not exist 3 years ago. It did exist a year ago. And so the opportunity to get this same access to resources like LPs, resources like back office management, resources like legal, that didn't exist for a lot of people. You used to have an uncle that raised a fund, or someone at Goldman introduced someone else who raised a fund. It just didn't exist for people of color. And so I think we're seeing the evolution of the industry with emerging manager programs like that he is building. I actually believe that some of the best incoming investors are going to come from the undergrad ecosystem. I think that they have both the ear and eye to the ground in terms of what's being built. Today, there's just a massive influx in capital in terms of what you're seeing from a dollars deployed perspective, in Series A stage. And so I think the best opportunity, if you're getting into venture, to beat some of those funds is to look at what your classmates are doing. Try to get a perspective on the different venture ecosystem, entrepreneurship campus, and start to introduce yourself to founders. Spend time with founders when they're most vulnerable, when they're insecure, when they don't have help, when they're wearing 15 hats, and try to find ways to help them. I think there's a misconception that in venture, you need $2 million to be a venture capitalist. I think you can get started way before. I think you can get started by being a value-added contributor. There's some examples around that are, can you help them with refining their pitch? Can you help them with maybe looking at their model and their business? Can you help them with researching or starting to get a sense of some of the different areas of competitive advantage where they can? Founders need a lot more than you realize.
Breaking up. Brian, you've been breaking up. I thought it was me. Now everyone is saying I thought it was me.
I was just going to say, I thought it was me as well.
I'm so sorry. It's not me.
No worries. Someone else can jump in. I'll try to jump back.
Well, I want to jump in for a second, and I didn't get the, for me, my journey has been long, and thank you, Brian, for shouting out BCI's new emerging manager program. I spent, 7-8 years working directly with underrepresented founders, again, in Africa, Black women, here in the US, across the nation, working with the large tech companies to find pipeline and a lot of those conversations, and this is like 2015, it's like six years ago, 2014, 15, was around where's the pipeline, right? And when I would be in those conversations, I was like, well, I'm surrounded by talent. I mean, literally, I'm surrounded by talent. There's literally thousands of founders, right? And they're all, by the way, me being a Black woman, first generation wealth creator at that time wasn't even close to that, but just, believing it before I could see it. I was like, I know I can get to this, right? And what if I could invest in even 10 or a dozen of these incredible founders, right? African diaspora founders that are actually coming to me, asking me for business development support, right? And because there was no one in the market that was even supporting underrepresented founders. And again, being, that looked like them, right? So I would get this and continue to get an influx of founders, but where is the access to capital? My challenge was always, I can source the talent, but what's the next step? And so after years of building ecosystem, enabling, environments for investments to happen, I still wasn't participating. One. Two, no one else I knew that looked like me was participating in those investments. When I say participating, I mean ownership and being able to write the checks. And so, around that time, a lot of the, pipeline angel networks started to proliferate. And so there was this like bubbling, and I was like, okay, building ecosystem, tech companies are starting to see it. They have a talent pipeline issue around tech. The impact investment, which again, I'm coming from that point. So foundations and government, et cetera, that are putting money into, investing in innovation was not connecting to any follow-on capital. So I started looking at the whole like 30,000 foot view of this a bit differently by 2016. And I was about to join a fund. I decided not to do that because it took me almost a year to find one Black woman GP with more than 10 years experience in VC. And that was a kind of an aha moment for me. And I thought, one, I kind of backed out of going to that particular fund for reasons. It just wasn't a partnership fit, and I don't want to be tied to that. But I also started, it was nagging at me. What's the actual, it's not a pipeline issue. It's an access to capital issue. That's where I have arrived at. And so by 2017, I was like, okay, if it's an access to capital, then all of the VCs that, as I was raising millions of dollars for, a founder here, kind of building out this ecosystem, what was the next step? Because if you got the first million, then what? If you got the pre-seed, who's going to invest in your A, B, C rounds? And I wasn't, as I'm building out the VC, my pipeline, it wasn't there, and it wasn't representative. And so that's really all of those kind of things, that cauldron of different data points really got me to thinking, well, who's building and growing the next generation of emerging managers, of VCs, right, that are of color? Like, how does that even happen, and who's doing it? And so as I realized that, there were some pipeline and talent development arms like an SEO, a Twigo, a MLT, amazing 20, 30-year veterans in, working with underrepresented, I hate, diverse, the Black, Brown, Latinx, BIPOC, all the words. But helping us, right, get access to capital, to financial services, positions, et cetera. It was so hard for them that I decided to really focus on, the supply chain of capital. And so the first step was to build a platform to aggregate best-in-class fund managers and to really understand what that ecosystem was. So 2017, 2018, launched VC Include the platform. And then I started realizing that how challenging it is, just equally as challenging, if not harder, for founders to raise capital as it is for, underrepresented VCs to raise capital, because of all the same types of bias and lack of access, right? Lack of access to the next level up, which is capital allocators. Those are the LPs and the folks that really have the power because they have the generational wealth. They have 200, I'll try to not name names. I usually do. If it was a Chapman House rules, I would. But, a particular son of a particular former president, so brother or nephew, anyway, in that line, comes out at 25 and raises $300 million. Why? Because not necessarily, because if someone loses $20 million in investing in that $200 million fund, they can get the political cachet. They can get all this other type of, social capital connection through seeding this 25-year-old boy who, by the way, now runs like $2 billion. So you look at that guy and then you look at a Brian. Why doesn't Brian or, 1,000 Brians, right? Or 1,000 of any of us on the screen have access to that type of capital. And so it's a different kind of game. And I think I decided, 4 or 5 actually years ago to start focusing on top down instead of bottom up, because my why, similar to Hadiyah, and we're just looking at it and approaching it from different multifaceted aspects, which is much needed, is to amplify and accelerate investment into underrepresented founders at scale. And the at scale part is the point where it's a supply chain of capital, conversation. And so I just decided to focus on the asset manager to allocate a role so that more founders would have access. So.
No, absolutely. I want to come back to the market in a minute, but I was similar to Bahiyah in that I thought it was just my screen that I couldn't hear Brian. So I wanted to give Brian a few minutes to complete his thought there, because I think that's really, really important as we talk about going into those who are asset managers. First, we're talking about how do they start that journey, and a lot of there's a ton of misconception there. So Brian, I wanted to give you a few minutes to kind of finish your thought.
No, thank you. And if I cut out again, just stop me. But I think one of the things that Bahiyah mentioned that's important to recognize is it's very hard for an LP that's used to looking at, I'm not going to name the fund either, that's something they're so familiar with, right? And so when me and my partner show up, we're 2 young Black guys, they don't understand the ecosystems that we're searching in from the founder perspective. They also don't understand the backgrounds that we have and the names of the uncles and aunts that we're associated with. What I think is super important is just institutionalizing our process and making it more similar and more consistent with the way that LPs traditionally allocate capital. And so if you think about a Charles Hudson or a Tony or a Marlon Nichols, they had to meet 3 times as many LPs as a traditional fund manager because their story wasn't the same story as a traditional GP. I think what Bahiyah is doing and some of these programs that are starting to emerge is allowing that to be streamlined, and it's allowing managers to get into business faster because we're able to demonstrate that we have interesting access and compelling access to founders that can be high performing, that can produce the same 3 to 4x net returns in a way that is just a little bit easier for those LPs to come.
No, I 100% agree. And I think also to the other point that you had mentioned as you were talking about when black folks were wanting to be in the venture space are pursuing that channel, one of the ways that they could get some of that mileage and they could get some of that was to help the other founders, help them grow, help them develop customers and product. Can you talk a little bit about that?
Yeah, I think there's a couple different ways. I'll bucket it in a couple different ways. One is immediately helping founders, right? Some people actually have access to founders and they think to themselves, oh, I don't have 150K, so I can't help a founder. That's wrong. There's a million ways that you can help a founder in their early business that will give you the same exposure to what it's like to be an investor at the early stage. The second part is build a thesis. Right? So maybe you don't know founders, but you have a market that you're super interested in. Maybe your parents come from construction. Maybe your parents come from the healthcare industry. Start to think about where healthcare or construction will be in 2025, not in 2022, and start to align yourself with some of the opportunities that are in that market. When you go into that venture interview, they're not looking for the same thing as a banker or a consultant. There's no right answer. You can't read a Wall Street article in order to get a venture interview. What they're trying to do is you're curious, and if you're a thinker, and if you can build your own opinions, because that's what we do. We are beta testers. Go out and we try to identify solutions that are.
Brian, you're breaking up again. So sorry. This one's getting good.
I know. I think this is when we got into the meat of it.
Sorry.
I think, and I'm paraphrasing because I'm hoping that we'll get a chance to have Brian speak uninterrupted with cuts, but he was really getting into the thoughts of like, how do you align yourself with the industry and opportunities? Because that's what investing is all about. You're just applying money as your leverage point, but there's other ways that you can apply leverage points. One of which is easily being, you find a group of companies that you see a gap in resources and opportunity that other people don't see, and you help that company get to the next level. If you do that consistently and those companies become successful, that serves as the basis of a solid thesis of people that, had they applied the leverage of money, think of how much more they would have grown and how the companies would have come out on the other end. I did want to shift a little bit as we're talking about that's the starting point is finding these access points into the market and into the space of helping companies developing a thesis, developing a track record so that LPs, those who give fund managers money to invest on their behalf. One of the things is the next step is then either making the decision to either take the step into becoming a part of a fund in an associate or an analyst position, or if you are higher up and could be in a principal or higher position, and or looking more towards starting your own fund. So I wanted to chat a little bit with Bahiyah a little bit about the market. So if we're talking about the market, we won't mention timescales, but I say a year ago, there was, when I was looking into, when I first realized that I really wanted to be in the VC space, I did the thing that you're supposed to do. I went and did informational interviews with a lot of folks who were in my network, none of which who looked like me. There were, that I had in that time frame, I can't remember, maybe one, if I could think correctly, that looked like me in the space. But as I'm interviewing these folks and I'm trying to figure out how do I enter into the industry, I was told to my face multiple times that VCs didn't look like me, and that and this is well-meaning folks, that VCs did not look like me, so I was not going to get the chance that I was going for. So I think that's one of those things that as we talk about the market for folks who have done, they've started out where Chelsea and HBCU have started. They've got the education, they've got exposure, they've done some of what Brian is talking about. They've built some track record. They've gone through some of these programs, and the next step is then really getting the ability to apply other folks' money to actual markets. And so, Bahiyah, if you could talk a little bit about the market, and especially from the fund perspective of how how we can make these connection points between Black fund managers and those who are running these funds and have the capital to leverage.
Yeah, I mean, it's a lot to unpack. I think there's a couple of ways to talk about it. I think in terms of the market, there's a lot of positive things happening, and there's challenging things happening. And so I'd say a few points on the positive things is there are more underrepresented Black emerging managers than ever, right? And that's a positive thing. I mean, the last year, part of the reason why we launched the first time emerging manager program was because once COVID hit, all of the funds on our platform were Fund 1, Fund 2s, Fund 3s, and a lot of them had to stop, especially the Fund 2s and 3s that they'd already had track records, they already had AUM. They might be launching a 30 or 50 or $75 million fund 2 or 3 after doing a concept fund, getting into some deals because they have a network to do that, and exiting and then saying, hey, we're good stewards of capital, we make good decisions, you can trust us with another million, another 2 million of our capital, continue to make investments. But when COVID happened, a lot of the market stopped, at least for a quarter. And a lot of those managers came to me and were like, what to do? And it's not like I'm an oracle. Like, your guess is as good as mine. We don't know how long this is going to happen. But, several of those Fund 2s and 3s actually closed their funds at whatever. So if one fund, for instance, was raising 50, had a hard cap of 50, and I think they got to either 27 or 28 million, at that time. And they had this pipeline, but it stopped. They weren't getting responses back from LPs. It was they totally freaked, they were just we don't know whether to stay fundraising or not. The bottom line is they closed the fund. So they closed at 27 and, said, we'll, make the investments that are already kind of in our pipeline, and, and then raise another Fund 3, once COVID's over, kind of thing. And so, back to the macro things, there's more than ever, there's first time fund managers that have come through this COVID period that have maybe spun out of financial institutions or have been, at a, smaller boutique firm, or quite frankly, have been great angels and are we want to, we're looking, we see all of this pipeline, we have the deals, we want to be able to invest in all of these great entrepreneurs. And so that avalanche of interest in, and, coming to us to say, how do we start this fund, really kind of drove me to say, well, there needs to be some kind of some programming, some infrastructure, some support for, building these funds. So that's kind of how our first program for first-time fund managers started, is because I went to allocators and I said, look, this is what the market is looking like. And then George Floyd happened, like right in between that. And then they were like, we get it, awakening, Black people haven't had access to capital. Like, that's what I've been saying for however many years, but now you get it. So fine. And so in any event, on a positive note, there's more boldness in saying we know how we want to steward capital, raise money, and invest in underrepresented, and that's a beautiful thing. And it's, again, much needed. The challenging thing is now there are a whole bunch of new diverse managers all raising capital, going to, a number of, starting with the LPs that have said somewhere, publicly that they want to invest in diverse managers. That's always the 20 to 50 list, of the foundations and endowments, et cetera, that have kind of gone on record to say that they want to make more investments. But now they've got this pipeline of hundreds of new funds that they don't know, to Brian's point and to Chelsea, to Oliver, they don't really know how to pick, right? They don't really understand the network. They don't understand how many viable entrepreneurs, how many startups are actually, fundraising. They just don't have connectivity there. And so it becomes tough, where LPs will come back to us and they'll say, which one? I mean, we're not a registered investment advisor. We're not a broker dealer. We're not able to be well, pick that one. We can provide data. We can say, we love them. They're on our platform. They're on our program. Come and meet them, see for you. If you have any questions, if you want a reference, ask us, and we're happy to provide it. But it's a challenge because, unfortunately, again, some people have kind of woken up. They also are kind of in that blinded, they're in that sleepy, Black fund managers, who'd have thought they were ever around? And so there's this get it together. This is a massive opportunity. And I'll say, I predict that the LPs that invest in these next generation of fund managers that are then investing in, underrepresented founders at scale, and specifically Black, because I'm Black first, Black women first, is they're going to see in 7 to 10 years the next unicorns coming up. Then it's going to be a whole different conversation of, I knew that, the first check-in was going to be the catalytic capital that was needed for this, founder to be a unicorn, which, is going to be, it'll be what it is. But I think it's a unique opportunity. And I know it's a unique opportunity. We're taking full advantage of it. But on the challenging side, there's this, we don't know how to invest and we don't know where to invest. And that's part of our job, is to kind of help that process along on the LP side so that capital flows. So that's just a macro.
No, I 100% agree. I think that people are starting to ask the questions. They're exactly coming to the table going, okay, now what? And I think they're trying to figure that out, which is good, and it's positive. And I also think, similar to such amazing programs that are out there, like you guys' emerging fund manager program, the internship ops that are with HBCU, and the NYC Path program that Black VC is doing. Again, those did not exist, 10 years ago. So it completely changes the market and completely changes how folks can get engaged and potentially find good pipelines of folks at different levels of talent. Want to talk a little bit about, as we're talking about the where to invest. I think that was also something that was told to me many, many times. I'm obviously, like I mentioned, based in Detroit, do a ton of work, what I call third coast, which is Michigan to Miami. But in general, the bulk of investing was concentrated on the coasts, San Francisco and New York. It was you were in one of those two markets, or you just really didn't have the chance to build. I was wondering, we can go back to Chelsea for a minute. I know they've recently expanded to some different cities. I want to talk a little bit about you guys' thoughts there on what type of potential investors you find there, and what is the goal and what is the outcome of shifting cities that you focus your programming in.
Yeah, so we started where HBCUs are. So Black, and these are Black communities, Black cities. We, and we're not at, people ask us this, we're not at every HBCU. There are like 100 of them. That would be, we don't have resources to do that, but we're at about 13 to 15 HBCUs for each of our cohorts. They mostly are in the Atlanta area, the North Carolina area, Florida, and then the DMV. And so what we've done with our summer internship program, which was started in 2019 in the city of LA, we're now expanding it to a couple of other geos this summer. But, Los Angeles saw this opportunity. Lots of companies in SF were moving to LA, and they wanted, we all want to make sure that the place and the industry is reflective of the people living there. And that to us is so important. And so what we saw with entertainment in LA is that LA is a Black and brown community. There's a huge industry there that is not representative of the people who live in this place. And so how do we make sure that tech and venture in this Black and brown city is reflective of the people that live there? Of course, right? Like the founders that are already there should have the ability to be entrepreneurs, to be innovators, not to move to other cities, right? There should be capital flowing in this place where people are already living and existing and working. And so that was our approach there. We are using that model to build out programs, our summer internship, which is a wider candidate pool. So you have to come from, Bahiyah, you were like historically underestimated. We're using this new term, historically underestimated group, which we really like. So not like underrepresented, not minority, not like historically underestimated, which we kind of like. I mean, feel free to use that. Yeah, hugs.
Yes, I love that one. I know. I mean, I use all of them because human language is important because hugs. I love hugs. Yeah.
Language is important. So we have expanded our program, historically underestimated groups, to Baltimore. There are lots of HBCUs. It's another Black city. So I'm from Baltimore. I was particularly very interested in making sure that we had some representation there. And, we have some emerging fund managers there, MAC. There's a lot happening in places that have been historically overlooked. And so there's real opportunity. And, we have a program in Birmingham, in Chicago. So other cities that are, Black and brown communities where we realize that there's opportunity, focusing on the coast has been historically what has been done. I think there's real opportunity. One, with COVID is probably a big part of the reason that we were able to expand to these new geos. Our summer internship program is run virtually, which talk about access. We have students living in Atlanta and cities in North Carolina who are working at funds in LA, New York, Chicago, DC, right? Like, because they're at home and they don't have to travel, there's no cost associated with doing the work, but you get the exposure and the experience. So that has been a huge opportunity that we've seen over the past year. And we're just so excited to be able to move into different geos where we see there's lots of innovation happening, lots of opportunity, places that are seemingly overlooked. I mean, Birmingham, who would have thought? But we have, there's lots of innovation happening in Birmingham. We have, four fellows who will be spending their virtual internships there, working at venture funds. We've been able to figure out how to make that happen so that it's a great experience virtually, and really, work with the city. So our partnerships are really important. So we are oftentimes working with cities, a foundation, people that have some sort of strategic investment and ideas about how the city should be shaped and moved forward when we're developing these programs in these regions. We're really happy to be expanding and really like hunkering down in a lot of these Black communities, Black and brown communities.
And bravo. I mean, I have to just say, I'm sure all of us are thinking it, I mean, gosh, again, 5 years ago, the fact that you guys are able to provide, a clear pathway from graduating or even being in an HBCU where so much innovation, I mean, that's our legacy, our collective legacy. Yeah. Anyone who's Black on this call, it's like, that's where my sister graduated, I mean, our families, like we were educated because of HBCUs, literally, Yeah. And to be able to harness that innovation and plug it into particularly local community-based, and that's the impact stuff, right? That we don't think about because we're also value creators. We create literally everything. I mean, come on, right? And so, but to be able to take advantage of seeing an investor in your city that you don't have to move to a coast, to a new place that people don't look like you, and have capital in those markets and have people that understand how the rest of the market and the rest of the global financial national markets work to plug in. We're all creating these pieces, of this pipeline. And in a few years, we're going to be able to do it ourselves, meaning we won't have to ask others to come in and invest in those communities, which is really, something that, as an option. I mean, you build it, every other civilization you build for yourself first. And so I'm really excited for what you're doing and Black VC and Brian and Frederick and everyone is doing Venture Catalyst. We're all kind of having these like different touch points that as they connect over the next few years is going to be so catalytic. Yeah. For our own communities. So
absolutely
good HBCUvc for that.
It's a heady feeling. I've been doing, I think this work since 2006. It's a very heady feeling to be in the midst of so much innovation and so many people coming to the table with these different movements. I did one recently with HBCUvc. We did a tour through multiple cities and Techstars. And just being in the midst of that, and you see that, and I felt that that was a really good point that Chelsea made earlier. When you talk about venture capital, you're looking at missing, they always talk about the missing network. And I think HBCUs have a unique network. I think that's a question that we can shift to Brian. If we're talking about networks and we're talking about like the network is what makes venture capital successful, either deal flow on the side of founders who have innovative ideas or deal flow on the side of LPs, those investing in these ideas and bringing those together. Can you talk a little bit about, and I follow Black VC all the time because they have really good intel. I'm always getting good intel off of the posts and things that you guys put out. Can you talk a little bit about what are some of the good networks and spaces that Black investors should spend some time in, and why, and where some of these exist and things like that?
Yeah, I'm breaking up again, so I'm going to keep this short. I think one is Blavity. Blavity reaches about 100 million people a month at this point. They run Afrotech. It's the largest Black investor conference in the world. It's an incredible platform, an incredible way to learn what Black people are building all across the Black tech ecosystem. Another one is the three platforms that are sitting right in front of you, right? If you're not following Black VC, HBCU, VC, and VC Include, there's newsletters and a ton of different ways for you to get involved. Again, you don't have to already be in venture or be building a company in order to start learning from these platforms. And then another one I'm just going to throw out there is Twitter. There are a million ways for you to start to learn how investors think and how founders think on Twitter. I think Chelsea had started to drop the name Mac. Mac Conwell, Rare Breed, has an awesome Twitter, and you should follow him. Lolita Taub, I'll also shout out, building the community fund. There's so many new ways for you to start to get a feel for what venture is that, again, just didn't exist even 12, 18 months ago. And so getting familiar with venture, I think, is a great way for you to get more exposure and then start to understand. I'll add one more thing. I think what's really cool about what's happening right now is we're taking back ownership. We're taking back ownership in these incredible ideas, in the incredible culture that the Black community has, and we're doubling down. We're saying not only are we building these things, but we're also going to reap the rewards when they grow. That's a very powerful thing that's happening. And so as I think about the continued growth of these ecosystems, building confidence in people is a major component, making you believe that if you build something interesting, that there will be venture dollars associated with that is a very powerful experience. And so as a young innovator, starting to see people take a company public that actually look like you, or starting to see people in a general partner or managing director role that look like you is a very powerful experience, and one that for a lot of us on this call, we didn't have the opportunity to see, or at least had to look far and wide in order to find. So I'm just super excited, like Bahiyah mentioned, about what's going on, and think that those networks that I mentioned are a great way for you to get involved in your early days.
Mute not working. Okay. No, that's excellent. I think exactly. Mac is amazing. Have had a good chance to work with a lot of them, and as the 500 team was mentioning, both Mac and Lolita are part of the next panel. So definitely make sure you surround it and take advantage of listening to them talk. They're doing some amazing work in both of their funds. Want to talk a little bit about as we're talking about the growth, and we're talking about black founders and black investors taking control of their portion of the market. One of the things that I've gotten a lot of, and still to this day get a lot of talk and feedback and questions around, is the stance of looking at the investment in Black emerging managers and the investment in Black founders as more of a social good versus an investment opportunity. So I was wondering if you can jump in a little bit and talk about the difference between the two, and where you see this movement falling, and some of those.
So it's an investment opportunity first. It's always, the capital piece, the just fact, and we have so much data to prove that, African diaspora and African American, innovators, we've really built the base of economic value in the US. Let's just be like super, fact-based about it. And so, the opportunity is to make money, right? That we'll be able to build, economic resiliency and generational wealth by investing in the innovations that are, led and created by Black people. It just hasn't been there at scale for all the reasons that we all know, from lack of access to, banks and loans, and, devalued homes that you can't get a second mortgage, and then, do certain things that, again, other types of entrepreneurs have been able to take advantage of in building their businesses. The social piece, it's the challenge with talking about, opportunity and I'm an impact investor is, there's actually and this is back to the opportunity, even in the global market. Impact investing in ESG has now almost surpassed, if not in some instances, but has grown in terms of an asset class or an opportunity bucket for investments. And what I mean by that is all the major banks, all the major financial institutions now have impact funds. When you have to look at the markets and how they work. When financial institutions start saying we're investing in this particular type of investment called impact, that means that the conversation around social impact, being philanthropy and, being like a concessionary and stuff, you can almost push that conversation, to the side when people start bringing that up and speak to the facts that ESG and focus, you read it in any institutional investor newsletter. Everyone is 80% ESG. This one's doing ESG fund, impact fund too. That, the ESG is outperforming the other portfolios, all of this stuff. And all that means is that doing well and doing good is making a lot of money. And so, you can look at it a couple of different ways. You can look at, impact on communities and that being a kind of a social good. But I always defer to, it's a wealth generation and wealth building endeavor to invest in communities and invest in Black communities. And we can make outside returns on those investments across the board. We just have to start talking about it differently. And we need the capital to invest. That's the other part, also the big part.
Capital? You need capital to invest? Really? Oh, okay, good stuff. All right, no, good stuff. One of the things that I think Brian made a good point, and you as well, that when we're talking about like how do we kind of increase the problem increase the solution and make it so that we're getting the connectivity points. It is the number one question I get from institutional managers and for traditional mainstream VC funds is where do they find these founders? Where do they find these emerging managers? Where? And so we talked a little bit about the three of your groups because I think that they are leading the charge in this space. But as we're talking about like what's next, what do you see as the next big thing in the space of investing that would be a good way for Black emerging fund managers to position themselves, as well as more mainstream managers to be able to find that connectivity point? And then that's for anyone. You guys are welcome. And also, just for the audience too, we have a few more minutes, but if you have questions for the panelists, please put them in.
I could just address it in just one quick minute. I think that investors need, and this is a journey, but at some point before you start a fund, you need to decide what kind of fund you're going to be. And what I mean by that, do you want to launch and raise an institutional grade fund, which means it's a different pathway than you're like, I just want to make investments into, people that I really want to invest in and companies in a particular vertical. There's so many new platforms that allow you to do that with like no SEC, licenses and that kind of stuff, rolling funds, Angel List, Republic, right? I mean, a couple of people I think have mentioned them. Those are good, aggregators of great deals and great opportunities to invest and be a VC investor. You're just not an institutional investor. You're a retail investor, which is, again, it's fine if you're making money. I mean, you want to decide who you want to be. I think that's really important. And if you're building an institutional grade fund, that requires a different type of understanding of law, having certain infrastructure, having a particular type of team, having either your own background or your team's background that reflects that institutional understanding. And then you have to start thinking about like the rest of your life. I mean, if you're an institutional investor, the honor and the pride that we have in having 15 funds that are first time funds that we want to see grow to fund fours is that we're going to be there for that. We're going to be there in 20 years when they're like, we're at fill in the blank name of fund, fund four. But that looks different than Republic, and it looks different than a retail investor trajectory. And that's okay. There's no wrong answer, but you do need to get to a place of, I want to be more traditional institutional investor or a retail investor. And you can go from retail to institutional later, but that's a big factor in you deciding to start a fund, like number one. And
absolutely.
Yeah. I'll add to Bahiyah's point there. I think one thing that's important for anyone on this call that might be thinking about it is starting a fund is not a way to get rich fast. Like, I want to be very, very clear about that. Yeah. This is a long journey, and part of the reason why I'm on it is because I fundamentally believe that there's a gap in the market in terms of Black emerging managers at $500 to $2 billion AUM space. There are a lot of funds led by Black managers at $30 million sub, and then there's Robert Smith. And there's not a lot going on in between. And I don't believe there's a platform that Black founders can join that they're proud to join today. And I think over the next 5 to 10 years, we have an opportunity to build that. The second thing that I would just quickly add is I'm very excited about.
Oh no, Brian, no.
Can you hear me?
Say it again.
What are you excited about?
Can you hear me okay right now?
Yes. Okay. Say that last part.
I was just going to say I'm super excited about Black GPs working together. Yes. I think the Black community for a long time has had to recognize that every year there's $100 million available for Black GPs, and they have to fight and scrawl and just go after each other. And I don't think that that's the case anymore. I think we have an opportunity to demonstrate that we can get to talented founders faster than others, and that there's room for more of us to exist, and we can start to share our resources and collectively build what I think is the future of venture capital, which looks a lot more diverse than it is today.
Yeah.
Elsie, did you want to add anything from your perspective of like what's the next big thing or positioning point that Black fund managers can spend their?
I think that Brian and Bahiyah covered it all. I don't want to be redundant, but I think that they covered some of the things that I was thinking about. So, yeah.
Excellent. One of the things that Bahiyah brought up, which is one of the questions that I saw from the chat too, is when we talk about, we see that it's a path and it's just a known thing that it's a network-based structure that allows who's going to get the investments. And when we talk about that, there's only, they say, 1% of over $1 trillion in assets that is actually managed by Black fund managers. So when we talk about options like Republic, and we talk about some of these options like equity crowdfunding and some of those kind of vehicles, those are, that is, if you guys want to dig in on that a little bit, that would be a great way to kind of close it out. 'Cause that's another way where folks who do not have the specific background and setup can invest in companies led by Black founders. So can you talk about that or other similar opportunities that allow more of those dollars to go into Black founders?
I want to just actually start with the comments. It's kind of burning in my brain right now that we build generational wealth through investment. That's how it's done in the U.S. and capitalist society, right? And so whether we, I think, as a community, as a group of hugs, should really think about not only how we're building our companies, how we're investing in others, how we're investing in other companies, how we're building our funds, investing in funds. I mean, there needs to be several different entry points for investment, because that's what's going to generate generational wealth over the next. I'm looking at 10-year trajectories, even though this is my life's work. I'll be doing this for the rest of my life. But really thinking about our generation as being the catalyst. I mean, in my heart of hearts, I truly believe that this is our moment to double down on ourselves and invest in ourselves. And it needs to be across asset classes and different types of investments. And venture, yes, it's great. And we do need, there's a Black manager that invested like $50,000 in Zappos, who made hundreds of X on that deal and doesn't really have to work. I mean, imagine how many of us could be in a position to invest in whatever we want to invest. So it's with that kind of, if we had thousands or tens of thousands or millions of, people of color that had that particular type of investment power, we could kind of change, economies of scale. And so I think that's what I wanted to say.
Yeah, I'll quickly add. Chelsea, do you want to add something before I?
No, go ahead.
Before I start breaking up again. The only thing I want to say is, specifically to Monica, your question, is do your homework. These platforms are not there to educate you. They're not there to tell you that money is locked up for 7 to 10 years and you're not getting it back. They're not there to tell you that money could go to zero in 6 weeks. I think that venture is risky class for a reason. And just because you have increased access to investing in it doesn't mean that you increase your so just be careful as you introduce yourself to the class, educate yourself, do your homework. I think that it's a phenomenal opportunity. I backed Backstage Capital through Republic. It was a great way for me to get exposure, but that's because I believe in Arlen Hampton and I know what he's doing. As you introduce yourself to this asset, make sure to spend time with people that are with it before you drop your 401k into it.
Yeah. Absolutely.
Really great way to close out. It's 1:59. We're getting ready to switch over to the next session. But I want to thank Chelsea, Bahiyah, and Brian all for joining us today. This has been a great panel. I hope you guys learned a lot. There's a ton of great information in the comments if you haven't seen links and things like that. As we close out, make sure that you check out Black VC. Make sure you check out VC Include and make sure you check out HBCUvc. They have a ton of different programs at all different levels of the pipeline. And I want to thank you all again for joining us today for this panel and for 500 Startups for hosting this as part of the Unity and Inclusion Summit. Thank you.
Bye, everyone. Thank you so much.
Thank you.
Thanks, Monica.